Hey guys, welcome back. In today's video, we are talking about AMC climbing, the MOAS stocks, how shorts are vulnerable to a short squeeze, and many more in this video. First, we're taking a look at this. AMC institutional ownership climbing. Weird how that's not in the news. Why would they be buying a bankrupt company? Now, this is something that we've been talking about in our previous videos, where we talked about essentially how institutions have been quietly buying up AMC. So contrary to what the news are telling you, to stay away from AMC, to sell your AMC shares, to be buying all these other cinema stocks as opposed to AMC, institutions are doing the very opposite, whereas they are buying in to AMC themselves. Now, this shouldn't come to you as a surprise. When you understand that the whole industry is recovering and improving as a whole, when you understand that AMC has the most potential within this industry, they're able to grow the most within this industry, it's no surprise that people are, of course, buying. Now, retail have, of course, already bought up, and that's why institutions are trying to get every shares they can. So when you see these news, again, we talked about how it's because they understand that the supply of AMC just isn't there. Retail are holding onto AMC shares, and they also know that it costs a lot for these institutions to continuously making synthetic shares. So what these institutions want to do is that they want to help themselves out and also help the shorts out by making the retail investors sell. Because when you're selling your shares, institutions don't have to cover the synthetics. When you're selling your shares, it frees up more shares into the flow for these institutions to buy. And that's what we are seeing right now. And so again, ask yourself, when you see these news telling you that AMC is going bankrupt, then why are institutions buying this company? If this AMC stock is going to go to zero, why are they buying AMC stock? You can also see AMC Daily Record News, 1 billion market capitalization, ridiculous valuation in my opinion, where we talked about how everyone sees. So aside from what we just talked about in terms of the industry improving, so you should be making sure that you're investing in this industry. When you just look at AMC itself, it is already extremely undervalued. That's something that both me and you and anyone else, in fact, knows about this. We know that AMC is undervalued because it's not reflecting what the value should be. We're not even talking about how much AMC should be worth after the squeeze. We're not talking about how much AMC should be in 10 months time, in a year's time with all of these fundamentals. We're just talking about with the current fundamentals and the current market economy, the current market state, AMC is extremely undervalued. Another reason for why institutions are buying. You can even see, so with half the movies released this quarter compared to 2019 pre-COVID, and we are grossing more. One of the things we've mentioned was about how right now we're seeing the average box office to have increased quite drastically. You can see a comparison of the current movies being released in comparison to before. So 733 million total gross, where we're looking at 723 million gross for 2019, but the movie difference is over half, 111 and 220. Now, another thing that we have to add on top of this is about understanding the fact AMC themselves have already said they are able to make more money with the same amount of box office than as before. Meaning that even if the total gross, now it's a $10 million difference, but let's say it's the same, 723 million for both 2025 and 2019. Right now, we are in a state where we are able to make more money now than we were back then. So that should already show you the fundamentals of AMC. Not to mention, we talked about how even though we are in a state where we're able to make more money now, we are still seeing the box office increase. And so you can understand how AMC is going to improve drastically. Take a look at this. Sticking with MOAS stocks like AMC and GME, stay the F away from the rest of the market. Institutions are looking for exit liquidity by baiting people with news into thinking this is the dip. You need people buying in order to sell off inventory. Now, as always, none of this is ever financial advice, so do take our taking of so much to do your own due diligence and research. But just like what we talked about with how we understand that institutions use news to benefit themselves, not benefiting the retail, but benefiting the institutions themselves. And so just as how they use the news for you to sell your AMC so that they can buy up AMC, they do the opposite as well by inflating other stocks, by making other stocks seems like it's the best stock so that you buy these stocks. Because when you buy these stocks, you're buying it off the institutions who are selling it to you. Now, like I said, I'm not telling you to be buying AMC and GME with all of your money. I'm not giving any financial advice. Always make sure you do what you with your own due diligence. But it's about understanding how we know how these institutions have been using news to try and alter your decisions, to try and subconsciously create incentive for you to get away from AMC themselves. Now, if we take a further look, you can see National Cinemedia handles the advertising for AMC and CNK. They believe that AMC will be around for another 2 decades and have no problems inking an 18-year deal. Now, that's confirmation and confidence in AMC from another sector industry player with skin in the game. Now, we've talked about institutional ownership at the very start of the video, but something else you have to also understand is institutions understand the longevity of AMC. We have been seeing how people are willing to give out loans to AMC in exchange for their shares. That itself is already showing they understand AMC isn't going to go bankrupt. Because if they're willing to exchange it for shares, then that means they understand that AMC share price will either stay at the same or at the very least go up. It wouldn't go down. Because if AMC shares were to go to zero, then they've essentially just given out money for free. So that is the first confidence. The second confidence is how people are willing to be signing deals with AMC for so long, an 18-year deal. That should already tell you that they understand that AMC will be here. So when you see these news about AMC on the brink of bankruptcy, AMC are going to be seeing bankruptcy, AMC doesn't have a good business structure, etc., that's obviously what we talked about with how they're trying to make you sell AMC shares, because institutions themselves, with the actions that they are doing, is showing how AMC is going to stay here, how AMC isn't going to go bankrupt, and how AMC is obviously going to increase in price. Now, if you take another look, Virtue is vulnerable to a volatility event or a short squeeze, potentially leading to forced margin calls and a liquidity crisis. Now, if you take a look at their key balance sheet figures, you can see the trading liabilities, 8.1 billion. Virtue also reported 1.15, the risk highlighted exposure. Let's take a deeper look at this. We talked about how already they are vulnerable to a short squeeze. It is a ticking time bomb. Now, in the past, we've mentioned how Virtue have increased their short positions, but we've seen a decrease in their revenue and their profits. We've seen how they have to borrow more money in order to keep up with their positions, in order to keep up with their margins. But it seemingly looks like that time is coming to a close. 2.8 billion securities loaned, 1.46 borrowed against repo agreements, 774 million owed to brokers, 8.1 billion trading liabilities at fair value, aka mark to market, instant to margin call if things move against them, all while sitting on only 723 million cash. Now, bear in mind, we've already talked about they are already owning brokers 774 million, so this doesn't even cover it. You don't need to be a rocket scientist to see it. They're leveraged to the teeth. They're vulnerable to any major volatility event. They're praying their books don't get stress tests. If a high short interest stock like GME or AMC breaks out, Virtue doesn't have time to hedge. They'll have to buy in to strength. Their repo lines are already maxed out. The trading liabilities are already staring them in the face. Their margin buffers are thin. One squeeze equals 4 margin calls equals scramble to buy in equals chain reaction. So now you can understand why. Firstly, we've been seeing institutions to buy in because we talked about how AMC is undervalued, how AMC has massive potential, but also they understand how AMC is a squeeze stock because they realize that we are seeing how these short sellers are getting very close to the brink of bankruptcy and having to actually cover these shares. We're also understanding that these firms, like we said, about the squeeze equals forced margin calls. And it's about understanding how this will be a chain effect because of the fact that they have been suppressing AMC in order to not face these margin calls. This is evident. We have seen signs, indications of this. But not only that, is how they understand that other firms are also involved in this. If Virtue, one of the bigger AMC short sellers, were to be margin called and having to sell their shares and having to cover the shorts and having to buy into AMC along with GME, it would cause major effects. One of the things we talked about was how it's going to be a small short sellers cover it first, and then the mid size, and then the large size. But if we see one that's already large size, like Virtue, closing in early, that's going to force the smaller shorts to get out. that's going to force the mid-size shorts to get out. And then ultimately, that's going to force the big-size short sellers to also get out as well, of course, with margin calls, with covering the synthetics, which is then, of course, going to bankrupt multiple firms and creating a massive squeeze. So if you're ever wondering why we suddenly see an increase in the pressure on AMC right now, especially with all the volatility that's in the market, with how all these collaterals are becoming a problem, it's because we're already seeing big firms on the verge of margin calls. But yeah, guys, thanks for watching this video. I'll catch you guys next time.